What's going on, everybody? My name is Avishek, and I'm coming at you with another monthly recap. This one's for February of 2021. This one's for the books, man. This one was a really bad month. If you've been investing and if you've been paying attention to the market for the last couple of weeks, you know that a lot of bad things have happened. Interest rates has caused fear throughout the market, and it's caused a steady decline for like the past 2 weeks. A lot of companies took a big hit, especially like the EV market and tech. It's a good time to buy right now. Unfortunately, I was in the EV market as well as tech. Those are like the two main sectors I invest in. So I did take a pretty big hit the past couple weeks. Overall for the day, I did good for the day. But then if we go over here to the month, down almost $3,000 for the month. And then man, a lot of those losses stem from this week. Not panicking. It's a fear driven dip. Interest rates are gonna rise. And so that's instilling fear in a lot of people. And it's just a domino effect when people wake up to see their account in the red because of the fear of the interest rates. They get scared. They don't want to lose more money than they already have, so they start selling. The stock price goes lower and lower, and then it just keeps repeating itself to where we're at now. And we just gotta hold through the dips. Nothing fundamentally really has changed in much of the stocks I've really have invested in. So we just gotta hold through the dip. If I gotta hold for 4 or 5 years to make my money back, it's all good. We'll go ahead and do that. If I go to all time, I'm down a G now all time. But I'm not stressing. I think within a month or two, we're gonna rebound. Everything will be back to where we were at before. Biden and may come out with a new stimulus package, so that's gonna be some good news. We also got earnings coming out for a couple of the stocks I'm invested in, so hopefully that does us good. But anyways, let's get into it this month. So down 25.80 for the month. For the week, down 25.71. And then today, up nearly $800. The value of my portfolio is $20,927, 65 cents. We're down $1,000 all time. And just for the record, there have been no deposits and no withdrawals since the last video or since the last recap. Everything's just been pretty much just the way it is. So let's see what happened this month. Let's go over here to the spreadsheet. So the only thing that's changed since the last video, I sold a few more puts, and that's kind of what killed us. We sold them a couple days too early. If I would have waited, I would have made a lot more premium. But let's get into it. So Plug Power sold the $55 strike price put for $4.15 on February 16th. Again, I like selling my puts a month out, so all these are gonna expire either mid-March or late March. Sold that for $4.15. Palantir sold the $26 put for $2.05 on February 16th, and then Workhorse sold the $29 strike price put for $2.67 on February 19th. These are still open. I haven't bought them back. I'm actually losing on all of these, man. The market dipped, and the share prices for these stocks are a lot lower than the puts I sold them for. But worst case scenario, I'll have to buy them, be forced to buy 100 shares at the strike price that was agreed upon, and then we'll just sell calls upon them to get rid of them. So in the last video, I highlighted that I was exercised and I was forced to buy Plug Power for $62 a share, 100 shares of those, as well as Neo for $58. So if you go over here, I did end up selling calls on them, a couple calls on the same shares. So Plug Power, I sold the $65 strike price call for $3.15 on February 19th. The stock price dipped and my call lost value, and it was worth only $1.99. So I bought it back on February 22nd for a profit of $116. So every time we do this, we're pretty much lowering our cost per share, and it's just making our investments a little bit safer, so are giving us a hedge basically. So on February 24th, I sold another call when the price went up a little bit for $65 as a strike price. Sold that for $200 on February 24th. Bought it back when the price dipped again for $149 on February 25th. So a day later, made a quick $51. And these two are the same 100 shares on Plug Power. Next, we opened up a $58 strike price call. We sold that for $175 on February 24th. Stock price dipped, and so we took advantage of that, bought it back for $106, closed out of our position on February 25th for a profit of $69. And then we, since we had all our shares, we just waited for the price to go up again. These are a month out. So Plug Power $63 strike price call, sold that for 205 on February 26th, and then Neo $58 strike price call, sold that for 206 same day. So if by next month, I want to say it's late March, if Plug Power is over $63 a share, I'll be forced to sell them for $63 a piece, 100 shares. And for that contract, I was paid 205. Same thing with Neo. If it rebounds and is worth 58 or more than $58 a share, I'll be forced to sell them at $58 a share. And for that contract, I was paid 206. So hopefully the market rebounds and does as well. Besides that, I did a quick little call. I bought a Apple call. Apple dipped really low. It dipped to, I want to say, like 121, 122. Apple regularly, it was between 130 to 140 before the dip happens. So I bought a call at a strike price of 130 for 310 on February 23rd, and on that same day Apple's price rose a little bit, so I took advantage of it, sold that for $400 and made a quick $90 in a day. And then let's see, besides that, I didn't really buy too many other stocks. What I did do was I'm trying to change my strategy a little bit. Instead of just selling options all the time, I want to have a real portfolio. I want to have a half of my money in stocks, and then the other half in options. So I'm trying to figure out how to do that. I'll go over how I divide that in the next video. As of now, I did buy into AMD during the dip. I took advantage of it and bought AMD, bought SPY, bought a few shares of Apple and SPHD. And so I'm going to start off with that. I'm still figuring out how I want to divide my portfolio up. When I figure that out, I'll go ahead and make a video about it. Besides that, I think I bought GameStop for like 130 and sold it at 180 during the hype. So I made a quick $50 there. Other than that, though, that's pretty much all that's happened. We're going to just hold these contracts and hope they rebound and just make our money back and go from there. I appreciate you for watching if you made it this far, and I'll catch you guys in the next one. Thank you.